Well, Rod, thank you for coming on. I just think multifamily 2023 outlook. I want to hear your thoughts on it. You're a leader in this industry, in this asset class around the U.S. So I know you have some things to say, and I think everybody ought to hear it because I know it's something that you do all day, every day.
Well, I appreciate that. And, as I told you before we started recording, I am pretty bearish. I actually
Right.
think things are going to get ugly and uglier than people think.
Yep.
And I think, the all the tech layoffs, which we're seeing are pretty extensive right now, are just a
Sure.
harbinger of things to come. When you see companies like Amazon laying off 12,000 people,
Yep.
Microsoft, Google, Facebook, they're all, tens of
Yeah.
thousands of people being laid off. I think, and what I just saw a headline on Fox yesterday about, a lot of the temporary workers are being laid off right now, which again, they say is a harbinger of future layoffs. So, here's my concern. Okay. This whole inflation came about because the current administration just went crazy with spending money. I mean,
Right.
crazy. And I mean, you could argue the previous one did as well. But the point is, we've been spending money like crazy, and that's what caused the inflation. And
Mhm.
so, yeah, the raising the interest rates is really the only mechanism that the Fed has, other than quantitative tightening, and it's not that effective. The
Right.
problem is there's too much liquidity, which of course
Right.
which they're trying to fix with the tightening. But and then they just passed that 1.7 trillion just in the last month and a half. It's like adding insult to injury with
Mhm.
their spending. And
Yeah.
so, I like I said, I'm pretty bearish. And so I don't know that there's going to be a big impact this year,
Right.
but I think by the end of the year, maybe, and next year, I do believe there is. Now, I really believe there's going to be pain in these operators that have debt that's coming due. In fact, I
Oh.
just got a list of delinquencies, and it's extensive, from people that have debt that's coming due because they didn't calculate the cap rate changes that are happening right now, the incredible interest rate changes that have happened.
Yeah.
I had an asset we were looking at in San Antonio. The guy's got bridge debt that's pretty close to being due, and his reserves with the bridge lender went from 8,000 a month to 80,000 a month. Okay.
Holy.
Yeah,
Yeah.
yeah, yeah. That's just one small property.
Yeah.
Another asset we got called on. Their interest rate went from 3% to 6%. I
Tied to
mean, when you're
LIBOR.
talking
Yeah.
multi-million dollar asset, that is a big freaking deal.
Yeah, there's a guy
And
that has 48 properties, was in Bisnow or one of them.
mhm.
48 properties, all tied to LIBOR, dumping as fast as he can because he's not going to be able to make
Yeah,
payments. So he'll have to
yeah,
declare
yeah.
PK.
Yeah, so listen, I'm bearish, but I'm also an
Right.
opportunist, and
Yeah.
I'm gearing up an acquisitions team. We just met all morning,
Yeah.
on taking advantage. We're setting up opportunity funds, distressed asset funds. I mean, training our team. I'm enrolling my students. I've got 1,200 one-on-one coaching students around the country in pretty much every corner of the country.
Yeah.
Enrolling them to send deals to us and work with us on getting these, because there's going to be incredible opportunity, and so
Well, that's what I think.
everything's going on sale.
Yeah, I think so too. I think there's going to be a lot of opportunity. We have a lot of our on our brokerage team, a lot of high net worth individuals that are sitting there. They're just waiting because they know there's going to be opportunity.
Right,
And
and
so,
that's what we're doing. I mean,
yeah.
of course, the single family space is already being crushed. I mean, I think
Yeah.
the values have dropped 30% in a lot of markets, and sales have fallen off off a cliff. And it's really funny. I got a text from one of my students today, one of my top students, and I'll tell you what he said, literally today. Hang on, here it is. Um, just got my first unsolicited email from a broker in a market I'm in, asking if I'm looking for deals, stating he has both on and off market. Here we go! Exclamation mark. Yeah, I mean, they're
Yeah.
coming. I've gotten more
Yeah.
emails from brokers in the last 3 months that I've gotten in the last 3 years. So,
Yeah.
again, with crisis comes opportunity. And the
Yeah.
beautiful thing about this business is these properties take cash, but it doesn't have to be your own cash. And there's a lot of
Right.
cash that's getting killed in the stock market, a lot of liquidity, a lot of people, very unhappy with that volatility. We won't even talk about crypto or FTX for God's sakes,
No, it's
and
not.
so there's money out there that needs a home that's getting killed by inflation, and there's no greater hedge against inflation than multifamily real estate. There's nothing better. And
Yeah, I
so
think
the key is going to be convincing these investors to not be fearful right now,
yeah,
because and that's going to be my focus with my students and my team. So
yeah, I think that we're seeing on the brokerage side, Rod, is that a lot of the land owners are still here and the buyers are here. So
right.
there's a gap still.
So
So
again, well, it's right now it's the owners that want to sell.
right,
Within the next few months, it's going to be more and more of the ones that
yeah,
need to sell. And
yeah,
that's when the
patience,
opportunity comes. Okay.
yeah,
It's going to be the need to sell. That's what we're waiting for and getting ready for. The ones that want to sell, they've still got pie in the sky. They just kicking themselves because they didn't sell 8 months ago.
right,
But,
yeah. Well, yeah, I
so,
think we're seeing rent stabilize across the country, right?
well, rent starting to flatline. Is that what you
Yeah,
mean by stabilize? Yeah, yeah,
yeah,
yeah.
yeah,
Agreed. You're not going to
yeah.
see the rent growth that we've seen the last few years. I mean, we've seen extraordinary rent growth.
Oh,
And that's the thing. A lot of these operators have, some pretty decent equity, unless they, got high loan to value bridge debt. Then, a lot of them could be in trouble. Those could be in trouble. But,
absolutely.
there's still some good equity out there, but it's dropping pretty fast. So these guys that have these assets that they can't refinance out of are going to need to move quick to, not end up in receivership or end up, costing their investors a ton of money. But there's going to be some pain. There are definitely going to be, people that invested in these assets. Some of these assets are going to, take a haircut. There's just no question
Well,
that's going to happen.
yeah, I
No
mean,
question.
we've had, and I know your story. You lost everything
Mm-hmm.
at one point and
Right.
came back with multifamily, but
Right.
we've seen 11 years of growth, and it's
Right.
been easy to make money doing this. So
Yeah.
the people that
Anybody
were,
could make money.
well,
Yes.
yeah, yeah, and so
Right.
now that's done. And we used to see videos about BRRRR
Right.
everywhere, how to do
Right.
it,
Right.
Airbnb, how to do it. And I just read that the number of podcasts starting on Spotify down 80%. So yeah,
Really.
it's just
Really
yeah, oh yeah.
interesting.
And so I just think that across the board, it's a reset, right? And we go through
Yeah.
this in real estate. This has just been an extended game this time, and so
Listen.
we're going to
Yeah.
go back to fundamentals.
Listen, no question on that comment, and no
Yep.
question that's the key, is to go back to fundamentals. But listen, business goes through seasons just like life,
Yep.
just like the weather. Okay, we are in winter now. Okay, but a lot of people, and the media, of course, are going to make winter seem like it's like a inevitable forever thing. It's like they did
Yep.
in 08 and 9. But after winter comes spring. So that's the thing to remember, is that there will be a light at this end of the tunnel. But I really, like I said, I think we're just in the first part of winter right now, and there's going to be a lot of fear. There's going to be, we won't talk about the media and all the crap they throw out there. You don't even know what to believe anymore. But there's so
Yeah.
much negative now that the public's sense of security is going to be threatened. The debt is getting higher. Credit card debt continues to reach high levels. And so, we're going to have a reckoning. That's just it. And that's just the way it works. That's what has to happen for things to get back to normal again. It hasn't, it's been too excessive. And so, but again, I'm not trying to scare anybody. If you're interested in this multifamily game, learn it immediately. I just had 930 people on my boot camp this last weekend, which is why I'm a little exhausted right now. But, pick your vehicle to take advantage of what's coming. If it's going to be single family, go learn it. It's going to be buying businesses. There'll be great deals buying businesses. Go learn it. It's going to be, investing and trading in stocks. Go learn it. Don't be a dabbler in anything. If it's multifamily, get your butt to one of my boot camps, but learn it right now so that you can capitalize on what could be the greatest transfer of wealth we literally see in our lifetimes. That could be happening right now.
It very well could be, because we
Yeah.
got so far away from the fundamentals. I mean,
Right.
the numbers that people were looking at, you're like, this doesn't even really make sense.
Right.
And they were
Right.
looking for these assets, and they're looking for future value, and I'm like, that's not going to happen. I mean,
Right. And the future value is gone now, at least for several years. So,
yeah.
you know, these investors that have been told a pie in the sky thing where they're going to get these
Yeah.
great returns, they aren't going to happen. And worst case, they're going to lose equity. They're going to lose capital. So there's going to be some pain. I hate it, but there is. But again, you know, in 2008 and 9, when I got my butt handed to me, I got crushed by that wave. Well, this time I'm surfing that bad boy. So that's why I've been with the team all morning, you know, working on strategy and investor relations and getting as many deals in our pipeline as possible and flowing them through our pipeline. Cause we got to kiss 100 or 200 frogs to find a deal. And so that's all the stuff we're working through right now to really gear up to capitalize on this opportunity. Really is what it is.
Rob, what markets are you guys looking at? You're doing Southwest, Florida.
Yeah. So right now we talked about this. We're going to pare this down a little bit, but I've got, pretty big team, but we've got Arizona, Texas, Florida, Georgia, the Carolinas, the eastern half of Tennessee, and we've got assets in Ohio and Indiana as well. Those are the primary markets we're interested in. But we have Warriors bring us deals from other markets. I've got some stuff in the Midwest as well, but every one of the markets I just said, I've got assets in, except for Arizona, but I do have someone work in Arizona, but those are the ones we like. I like the Sun Belt stuff. I think 80 million baby boomers getting old and getting cold. I think that's definitely a positive for the southern states. I also like the red states. I don't like blue states. Not a political thing. I mean, we could talk about the political component, but that's not why. I like it because of the less regulations, the less brain damage, the less cost of doing business, and the less government intervention in those markets. So those are factors I look at.
Where are you at in Texas?
I'm not in Texas, actually.
You're not in Texas.
Where do I have assets? I have assets in San Antonio, Houston, and Dallas. Several in Dallas. Yeah.
Okay. Yeah. Mm-hmm. Yeah. We sold our entire portfolio in Dallas. This has been about a year and a half ago, almost 2 years ago. And what they paid, they were not on the market. And he came in and the number he paid was, I'm like, okay, well, fine. Well, we're out.
Yeah, I mean, there's some points you have to sell, and I like holding on to stuff, but your timing was good. You may have left a little meat on the bone, but that's okay. I mean, your timing was good.
Our plan was to redevelop the properties, add more units, and then fill it back up and flip out of it. The number he paid was almost exactly that, and I don't know that we would have got that because we would be doing the construction right now.
Oh wow!
And so I think, this worked out well for us, but he's got it back on the market at a price he's never going to get.
Wow. So he bit off more than he could chew, and we're seeing that a lot. Okay. Yeah. Again, right now it's the people that want to sell. He's probably a need to sell. He just doesn't, he's still got pie in the sky as to what he thinks he's going to get. But it's coming. Let's just get ready for it. Let's get excited. Let's rub our hands together and let's not get caught up in the fear.
I don't see it as a negative. I see it as people that weren't, well, I kind of do. The people that get their ass handed to them, they're going to lose everything. That's terrible. But the people that have been doing it right for the last few years and have done the fundamentals, they've got money set aside. They've been watching what's going to be coming. Yeah. And it's going to be opportunity for all of them.
Yeah. Yeah. So. Well, listen, if you're listening and you're interested in multifamily, go to rodslists.com. There's a bunch of free resources there, books, free books and stuff. And my boot camp website's there. My boot camp, I don't sell anything. The virtual boot camp's $100 to come. So it's kind of a duh if you're interested in this business. But here's the message. Pick a vehicle right now. Yeah. Get up to speed right now because opportunity is upon us.
Yeah. Yep, that's great. Well, Rod, I'm also going to put the link to your website and all that down below.
Appreciate it. Yeah.
Thank you very much for coming on today. I appreciate it.
Good to see you again, Joe. Thanks.
Take care.